If you're new to investing, ETFs feel like the cheat code to wealth. Today, you'll learn the simplest, least intimidating way to start a diversified portfolio in minutes. ETFs are exchange-traded funds that bundle hundreds or thousands of stocks or bonds into a single trade. They trade on the stock market, just like a regular stock, and they charge far lower fees than many mutual funds. For beginners, the mission is simple: build a core and stay inexpensive. Automating contributions and rebalancing keeps you on track without stress. The most beginner-friendly plan is a core trio: a broad U.S. stock ETF, a broad international stock ETF, and a broad bond ETF. Examples you can start with today include U.S. broad exposure with VTI or SPY, international with VXUS or VT, and a bond core with BND or AGG. If you're keeping it simple, a common starting mix is 60% U.S. stocks, 30% international, 10% bonds. If you're more comfortable with risk, 80-15-5 or 70-25-5 can work as well. Actionable steps to implement now: open a brokerage, fund your account, and place orders for the 3 ETFs in your target weights. Set up automatic monthly contributions and a single annual rebalance to restore your target weights. Keep costs in mind. Pick the lowest expense ratios you can find, and avoid frequent trading that increases fees and taxes. Use a tax-advantaged account when possible, and remember that your portfolio's performance depends more on time in the market than timing the market. Why this approach works: it gives instant diversification across many companies and sectors, reduces risk, and teaches you discipline. ETFs offer transparency, liquidity, and tax efficiency that make them ideal for beginners who want to grow over years, not days. Common pitfalls to avoid include chasing hot sectors, ignoring your risk tolerance, and trying to outsmart the market with frequent rebalancing. Stick to your plan and resist the urge to tweak it every time the market moves a little. What if you want to customize later? You can adjust the mix as your goals change, or add a dividend-focused ETF like VIG, but only after you master the core. A growth tilt can be tempting, but pace yourself and test it in small steps. Takeaway: the simplest, most practical path for a beginner is a small, diversified core using a U.S. broad, international broad, and a bond ETF. Pair that with automatic contributions and a yearly rebalance to stay on track. If you found value, like this video, subscribe for more practical guidance, and leave a comment with which ETF you're starting with.